right? 7/7 at 7 p.m. It's the 777. I love 777s, okay? July 7th, 7/7 at 7. I am going to be revealing my new trading strategy. Could increase the dollars in your pocket, but that's not it. What I'm going to do is I'm going to reveal also 5 stocks. All right, we did one yesterday. It was Apple. I got 4 more to show you. All right, I'm going to show you those 4. We're going to talk about trigger dates on those. And I also have a report on each of those 5 with a summary on each of those 5 that you can put in your pocket. All right, so I've got that for you. And guys, how good is this strategy? Let me tell you, for those of you who are new, last quarter, winners and losers, right? Looking at flat rates, $13,000 is what you would have made. We went, I think, 16 for 17 or 17 for 18 using this strategy last quarter. And it is not without losses. I mean, you know what? Full transparency. It's more important to concentrate on the winners, on the overall winners. So, guys, sign up on the link. Get my VIP spot. Join me at 7 p.m. We'll reveal it all. Show you how to trade this crazy market. Right now, if you see, you can see a button on the screen. Click on the button, and that'll add the event to your calendar so you don't miss it. I'm going to be on live at 7 p.m. This is Tom Gentile signing off. Bye, everyone.
Tom Gentile tonight at 7, but right now we're diving into something for you crypto investors. We're bringing in Nick Black. Sorry for the delay, but let's bring him in 5, 4, 3, 2.
Pew.
I know.
That's
I'm
it.
Sorry, Nick.
1 pew.
What?
It isn't your fault. We were using, we tried Stellana for the back end this morning, and it crashed. Big surprise. So
I was extremely surprised. I thought Solana was more of a reliable platform service thing.
Well, it's good 3 days out of the 7. We just picked day 4.
We should have known better, really.
No so bueno, no so bueno. Okay.
What's going on
Well, we
today,
got past that. No worries. We're going to talk about a few things today on in our show, American Institute for Crypto Investors. We are going to talk about stablecoin transparency. We're going to talk a lot about stablecoins because most of this market kind of chaos came from the unwinding of a stablecoin. But the greater expansion of the digital asset space is probably going to be on the back of stablecoins that are consistent to the price of the asset that they mimic. And it's not so easy to do that if you're not a government. And so there's all sorts of kind of conceptual things, hurdles you'd have to jump. But anyway, so we'll talk about that from the viewpoint of what transparency in a stable coin could mean as far as the collateral, which I think it's all about collateral. I think, well, I've got some collateral ideas, but anyway, we'll talk about UK legislation. We'll talk about Circle and USDC and the fact that they don't rehypothecate their currency units like BlockFi did and like all these other idiots do. They don't do that. They don't loan it back. They don't take in $100, issue $100 of USDC, and then rehypothecate the original $100 to try to goose you twice. They don't do any of that. That's why USDC is pretty dope. We'll do some Q&A, but actually, Eric, didn't we decide that because we tried Stellana this morning, but we were going to try to answer some Q&A first, right? Because sometimes people say, bro, you didn't get to my question, bro. We're like, bro, we want to though, bro.
Nick, we are men of the people. We want to hear what the people have to say.
Well, wait a minute. We can't say men. That's toxic.
We're people for the people.
I think people is toxic.
We are just trying to help out some viewers.
We are pronouns or indirect object pronouns, or for people whose pronoun is a lack of a pronoun. We are lack of pronouns for the people.
For the people. But you know what I want to ask the people for right now? I want to ask them, how has Nick Black and his crypto advice helped you? And I'm asking you guys to let us know in the chat, what have you learned from Nick? We've been doing this for a year, right, Nick? It's been a long time, a year here. So I'm really curious to know, what have you learned from Nick? How has it helped you get into crypto? How has it helped you protect yourself in crypto? And just give me your thoughts on this, on Nick Black and everything that we've been learning here with him. With that being said, we're going to be looking for those, grabbing some of them. You never know. Your comment could become famous, viral even. You don't know.
Ew.
Yeah, viral's good.
You don't want to go viral?
Internet viral.
Oh.
Yeah. So
that's a good one. The other one, you get a shot.
No, yeah, you don't want that one. Let's go into our crypto Q&A. And Nick, we're going to start with this one right now. What coin do you recommend for staking first time?
So this is an interesting question. So with staking, you have to understand staking is just a mechanism for rewarding the people that are participating in the validation of transactions. And so a lot of things look like proof of stake, or they'll say, hey, you're getting staking rewards, but that's just a way to incentivize you taking their tokens off the market. So you have to be careful that you're actually in a staking protocol first. But let's even go a higher level than that. Forget about what's the place to start. I think you need to decide how you want your portfolio to be broken down. What's the distribution in your portfolio? Everybody in the digital asset space, really everyone in general, is a portfolio manager. And if you are a competent fiduciary, unlike Celsius or BlockFi or Three Arrows or Coinflare or Maple, or yes, I could keep to, or Vald, I could continue to go on. This list is massive. You don't want to be them. What you do want to be is someone who looks at all of your assets. You go through and you look at the team, the timing, the token, the tokenomics, the technology involved, and why the token exists. And if it kind of checks all of those boxes and you feel like, hey, this is something I want to own, it's a nice incentive, not unlike a dividend, to get paid a little bit extra for participating. And in proof of stake, you are participating. It's not just a dividend or a reward. You're participating for taking your tokens and pointing them at a validator or participating in the validation of transactions. You get a little extra juice. You get a little dividend. Sometimes it's by the second. Sometimes it's every 5 days. They have these intervals. So you can't say what's the right token I should be staking. The question is, what tokens should I own in the first place? Now, once I built my portfolio that makes sense for the next 3 to 5 years, now I'll go look and see, okay, of these assets that I own, which of these can I stake and grab a little bit extra dividend and get paid in the asset that I already like? So I would say go further out. There's not a first best or anything like that, or a recommended one. I recommend that you build a very competent portfolio, and then you go back and say, what are the assets that I can get paid staking rewards already? Okay. Does that make sense?
Oh, Nick, that was fantastic. And it leads me into our next one for the new member. Now, I don't know, maybe we kind of touched on this already, but you mentioned buying through staking. How do you know which cryptos are staking? So where can you find out what things you can stake?
So almost all, I think all of the protocol layers, the layer one assets, have pretty much moved to proof of stake. The only one that's the only major one is Ethereum, and they're moving to proof of stake. Will they get there? We sure hope so. But the easiest way is, I would say, as a general rule, layer one assets are proof of stake, because it turns out it looks like it's a better consensus mechanism than proof of work. And I say better. Better is a kind of transitional term. Better for some things, maybe not other things. There's always trade-offs. In the crypto space, there's trade-offs. You want concreteness, you want liveness, and you want termination. As far as if you were to go and talk to a developer and looking at a protocol or looking at a project, when those transactions are bouncing around, you need concreteness. You need to know that the answers are real, that the state of the network is determined. You want liveness. You want the thing to work, unlike Solana, right? Look at Bitcoin. Bitcoin has continued to be live. Its liveness is perfect. So it's never been just turned off, right? And you want termination. You want transactions to terminate at some time period, at some interval. And that seems simple, but there's trade-offs. And then you start saying, okay, well, we want to be really, really fast, really, really scalable, but we also want to have, tons of currency pumping through the system. And we also want, to be super secure. Well, those are trade-offs. Bitcoin, proof of work, incredibly secure. However, it's slow, it's gummy. For a lot of things, it's inefficient. It's unlikely, not impossible, but unlikely that smart contracts will ever be deployed against or on the Bitcoin blockchain. If it does happen, it'll happen on some side chain or some extra chain. And it's not clear that even makes sense, right? So different assets do different things, but to reduce all of that back kind of to staking, if you really, as a general rule, layer ones are proof of stake. However, you can just go and Google proof of stake cryptocurrencies. Then go look at their market caps, like on CoinMarketCap. It's a great place to go look. And then you can go see, okay, where's this thing at? Where does it fall on the list? Is it something that I think I should own? Have I ever heard about it? And then you start building your portfolio.
Wow, Nick, you're very good.
I'm crushing it.
You are crushing it. You're doing well.
I studied for the test. I studied.
Did you?
Yeah.
Good. How about this question? This is from Chance the Investor. Hey, Nick, do you use a recommended or portfolio aggregator? Have bought the same coins on different exchanges depending on fees, but finding it hard to keep track. Man, hard to keep track. Thanks, yo. You get what he's trying to say there? Man.
Yes, I speak Chance, okay?
That's tough.
So what I would say, this is a good question, is there's a couple of ways I track things. I use Blockfolio on my phone. And why Blockfolio is cool is because it lets me set up kind of a dummy portfolio, and then I can scroll through it in real time and see what's going on. And you can put notes, and you can even enter the exchange that you own the assets on, where they're at, where they're bought, all that. I don't hook the exchanges up to Blockfolio. I simply use it as a tracking app. There are plenty of other ones. I would recommend doing that because no matter how clean and elegant and concise you think your portfolio is and your management of the assets, they're probably going to be spread over a variety of places because of staking, various rewards, being able to accept airdrops. Crypto is not easy. It's not easy to build in the crypto space. It's not easy to invest in the crypto space. It's not easy to manage your assets. It's a lot. It's like a whole thing. And this is why everyone is grappling with this. However, if it was easy, the opportunity would be gone. So think about that. When it's easy enough that grandma can do it, there's not that much juice left in that fruit. Does that make sense? Eric,
100%.
You're juicy and fruity.
Am I?
Would you say you're early in the Eric cycle?
I guess so. Yeah, I'm juicy and fruity, Nick.
You heard it here first. Eric is both juicy and fruity.
Hey, Nick, I have something on KuCoin right here. It's from Sync. Rumors are circulating that KuCoin may be in financial trouble and the exchange may begin blocking withdrawals. Do you have any idea whether these rumors are true or not, given the heightened credit risks emerging across crypto service space? I want to be extra cautious.
Well, think about it. If you've asked me that question and you're uncomfortable, then you should have already removed your assets. Listen, don't wait for me to tell you. Unless I'm on your Rolodex, unless you're paying me what my clients pay me, which is exorbitant, then you're not calling me at 3 a.m. Don't wait for Nick to call you at 3 a.m. If you're uncomfortable about any of your assets on any platforms, get them out of there. Take them away and put them somewhere else. If you have a little voice, I don't think KuCoin has any problems at all. I think it's mostly shenaniganery, and people are starting to weaponize fear, right? But if it's worked on you and you feel uncomfortable, get your stuff off of there. Don't lose any sleep. If you're losing sleep, de-lever. You shouldn't be leveraged. De-risk, sell, exit a little bit. I lose sleep because I don't own enough of stuff. Hey, Eric, are there any crypto assets? I know you got out of crypto months ago and you don't buy crypto anymore, but were there like any assets that you were losing sleep because you didn't think you had enough of them?
I'd like to have more Bitcoin. That's the one that I'm under leveraged in.
So you know what mine are right now? My two.
What are they?
It's weird mix. It's Matic.
Really?
And NewNet.
Okay.
Matic keeps signing deals, and I feel like I'm on the back end. I'm trying to play catch up. I don't have the kind of exposure to Matic that I think I really should have, and I don't think I have enough NewNet. And again, I'm not telling anyone to pivot off of my advice. I'm just telling you this is where my head's at. I think NewNet at $0.015 is extremely undervalued based on what would happen if they roll NewNet services out to all of the stake pool operators, the 3,000 plus stake pool operators on Cardano. That would be, you don't think those people are going to hold the token if they're all leveraging it and getting paid in the token and using NewNet services to borrow compute space to lower their costs? Man, oh man. So anyway, I lose sleep over those. I don't lose sleep, but I feel like I'm missing it. I'm missing the benefit of the bear market. I need more money. Can someone give me more money, please? That's all I'm asking. I'm just asking for more money. Please make your checks payable to my best friends call me Cash.
Nicholas Cash.
Nicholas Cash.
I have one more question, Nicholas Cash.
Wish you would.
And then we can
Juicy
get into some of
Fruity
our
Eric.
and then we can get to some of our story. So I was milk toast, but now I'm juicy fruity.
Would you rather be milk toast or juicy fruity?
Probably milk toast is a little bit better. Just a bit.
Sounds. Wait, why is it better?
Just it's not juicy and fruity and sticky. And, yeah, that's what I mean.
Okay. I'm just seeing if you're on the threshold of being canceled. Me too. Out of this.
No, I'm more of a French toast kind of guy than I am a guy that goes and
French
eats fruit.
toast is not milk toast, though, is it?
Close. Similar. Pretty close.
There's no syrup involved, and you would be sweet and sticky in that case too.
That is true.
Have you ever had French toast and you just a little piece of the bread fall, and it doesn't just fall; it gets to your shirt, and then it inchworms down your clothes.
Nope. I'm very neat eater.
And then it goes right in your pants, like in the. I'm going to get crude here for a second, but it goes straight down into the place where it looks like you have like involuntary bowel evacuation problems, like you can't control it. And you're trying to explain to people, no, it's just sweet maple syrup from my breakfast. They're like,
No, that's never happened to me, Nick. That was pretty specific though. So
well, you're juicy and fruity, aren't you? That would not happen to a juicy fruity Eric.
No, I'm not klutzy at all, actually. Very not klutzy. You want this question? Yeah, good.
Yes, let's do it.
From another new member, buying quality assets in Voyager may not have made any difference. I wanted to move the cryptos to MetaMask, but kept putting it off because I didn't know how and knew it would take some effort to learn how. So what happens now with my Ethereum, Algorand, and Matic in Voyager? Bankruptcy?
Okay, put that question back up there because there's a couple of questions embedded in that question, and this is a game theoretical question, really. Okay, so buying assets in Voyager may not have made any difference. Well, one, nobody here. Well, I'm just going to say this. One, Voyager is going to indirectly be fine. Their restructuring is one because they got screwed by Three Arrows because they were lending money they shouldn't have been lending, and they were lending it with zero collateral, which you also shouldn't do. There's a lot of things that they did wrong, but they weren't gambling, although you could say they were gambling because they were lending uncollateralized. That's, 2007 and 2008 has taught us a lot about that. Well, Voyager, if your assets will come back to you at some point on Voyager, right? That being said, you don't want to trust these third parties. Voyager is not really an exchange. And Voyager is not Coinbase. Voyager is not Kraken. And so, I think you have to be careful. And again, I know crypto is not easy, but you got to be careful where you buy your assets. And I know with 100% certainty that I have never told anyone to buy anything on Voyager. And I've actually told people I was not comfortable about it for a long time. Now, we didn't focus on it because it was never a focus until they started having trouble. And again, Voyager's troubles, it's not Voyager behaved badly other than to extend credit lines, things like that, that they shouldn't have extended to idiots, which is the idiots at Three Arrows that apparently owed everyone in crypto money. So when Luna got nuked, everybody that had a lot of exposure to Luna got nuked, and Voyager is part of that. Because indirectly, Three Arrows was part of that. Apparently, Three Arrows' whole business plan was just make money off that, make 20% and collect some arbitrage spread between what we can borrow money at and what we can lend it into UST. Never mind all of the red flags, and that should tell you that Three Arrows Capital was managed by idiots. I mean, just straight up idiots. And I hope it wasn't criminal idiots. That may come out in the future. But at least with Voyager, you had, maybe they were negligent in their lending, but they were not gambling directly. So that's good as far as you waiting. But it's bad if you were in there in the first place. There's a lot of these places that don't make sense to put your currency units. Just be very careful where you put your currency units. And I think a lot of times in crypto, Eric, when you first got into crypto, did you kind of rush out and start doing stuff really fast?
Well, yeah, but I was always dollar cost averaging as per your recommendations. But yeah, I was excited to take my money from savings and get it into crypto to try and start making money. Just at the wrong time, unfortunately.
Well, that's the juicy, fruity way, isn't it?
Yeah, I guess so.
You take a shotgun and you just go pew, pew, pew.
Squirt everywhere.
Ooh.
Just juicy fruit. Squirty.
Squirt though?
Drippy?
You made it weird. Now I feel like I need to I think my brain needs an exorcism. All right. So if you're in the position where you're stuck on there now, you will get your assets back at some point in the future. I don't know if you're going to get any of the rewards or the staking or the anything. You will get your assets back, but they're going to be stuck there. Please be careful where you put your stuff. And if you own so much stuff that you don't know where it is, you own too much stuff. Don't enter the crypto space and try to play catch up. I see that more than anything else. Everyone's trying to play catch up. Oh, I think I missed it. I want to play catch up. No. You are where you are right now. Where the markets are, that's where they are. You dollar cost average into things that you think are quality. The crypto space is early. It's still really early. You haven't missed anything. Matter of fact, you got to go in a time machine back 1 year. Everybody here that's only been in the crypto space like 8 months or less, you're incredibly lucky because you've seen what the markets could look like in November, and now you're 80% off those highs, probably. So you have an opportunity to build into this space before anyone trusts it. And right now, when everybody's like, it looks like, the crypto's not going to make it. No, man, infrastructure is building. Layer ones are building. Cardano's building. Matic is building. Near is building. Algorand, Cosmos, Polkadot's even building stuff. Those guys, when they're not high. So there's a lot of building going on. They haven't stopped. You're seeing, I think, a lot of opportunities. Just be careful that you don't buy stuff and don't even know where it is, because that's no good. Don't be a squirrel. Squirrels collect all this food and they're so clever at hiding it. I don't know if they're so clever at hiding it. I think that they just have really bad short-term memory. Hey, Eric, do you know how long the memory of a goldfish is?
1 second.
I think it's 3 seconds.
Yeah. So they'll forget foods up there
Eric,
if they stop eating for a second or for 3 seconds?
Hey, Eric, do you know how long the memory of a goldfish is?
1 second?
We should just goldfish loop people forever. Anyway.
That'd be awful.
Okay. We have one more question, don't we?
No, that's it for questions for now. We could always come back to more from the chat at the end, but we are going to get into our crypto headlines right here, Nick.
Ooh.
Oh, yes. And we're going to start it out with this one. It's an opinion piece. New York regulators have planted a seed for stablecoin transparency. New guidance from the New York Department of Financial Services should shake up the stablecoin issuers due attestation and other reporting, says our columnist. And in quotes, anyone who owns stablecoins that conforms to NYDFS standards will be able to sleep soundly at night.
Well, not if the dollar goes into hyperinflation. But short of that. So just remember, owning a stable coin protects you. Okay. Owning a stable coin gives you a fiat currency proxy. It is the weakest kind of crypto. It is not really decentralized. There's always a central authority involved, and that's just part of it. But remember, you don't own stable coins to get rich. You don't own stable coins to get paid, bro. You don't own stable coins to have a fancy house in McLean. You own a stable coin as a sidestep. I don't want to go back to the fiat system. I want my money where I can deploy it digitally or where I can send it back and forth. It's just a little bit more efficient fiat currency. On the other side of it, you have to make sure that whatever stable coin you own is backed by the underlying asset it's trying to proxy. Meaning, if you own a dollar denominated stable coin, there should be dollars or dollar equivalents in some account collateralizing that. If not, what you own is a Ponzi-nomic coin. So that's what they're trying to do, and this is good, is New York, which New York is kind of, sometimes they do some wonky stuff, but their heart's in the right place. They want to make a safer space, and they want stable coins to actually be stable. Now, stable to the currency for which they proxy, meaning a dollar should be a dollar should be a dollar. A dollar should not be 92 cents or like 12 cents or 0 cents. That should not be, right? So a euro should be a euro and so on and so forth. It doesn't mean that those currencies can't hyperinflate or get nuked or that, bad governance, legislators, banks easing, all this kind of stuff. Doesn't mean that's not going to occur. It's not a protective mechanism against bad banking or bad fiduciary behavior. It just means your dollar is still a dollar. That's all. So, but good news for stablecoin users. Stablecoin transparency standards are set to improve, courtesy of the New York Department of Financial Services, NIDFS. I like NIDFS. Which last month issued formal guidance for NIDFS-approved stablecoin issuers, including upgrades to the amount and quality of information that issuers must provide to the public. This is good. We like this. We want them to have open and clear auditable books, right? Unlike Tether, which their books are like, well, there's some guys. You can call them between the hours of 4 and 4:06 a.m. Panama time, and they will tell you. They won't tell you in words. They will tell you in Morse code how much money is there. Trust me, they've seen it. Trust me. No, I don't want to trust anybody, especially with stable coins, because when these things unwind, they unwind quick. Anyway, they're going to kind of endeavor to create a landscape where these stablecoin issuers have very clear reporting requirements that you can check in real time. Increased transparency is a welcome development. It means users will have a better ability to vet stablecoins, and with more eyeballs on them, stablecoin issuers will be pressured to provide a safer product. I'm not so sure that's the case. I think there's still going to be a lot of shenaniganery, but we'll see. New regulators will directly apply the new regulations directly apply to the Gemini dollar. Don't touch it because it has to do with Gemini, and I wouldn't be anywhere near Gemini, which is issued by Gemini Trust. That's funny. Gemini and trust. Two words that shouldn't be together because they're actually in trouble for lying to regulators. Oh, weird. Huh. And Binance USD, called Bust, which I'm sure it is a bust. If you trust Sleazy CZ over at Binance to give you this is the same. You're asking for good, solid accounting from the dude that goes and changes his tweets every time he tells someone to do something stupid. He just goes back and he'll tell 450,000 people, hey, listen, this is going to be an awesome project. It's going to be, then the whole project disintegrates. He's like, tweet erased, tweet erased, tweet erased. I never said that. My head is large. So I don't know, man. Their examples are not great. And then you have Paxos Trust, USD. Paxos is like, well, it's backed by gold and all that. Okay, well, there's another issue. Gold is not so clever, right? You let me know when gold starts tracking inflation because it's never done it ever. So, and look, I'm a gold guy. I hurt on the inside, but like enough is enough. So those stable coins were introduced in 2018 when NIDIFIS initiated its regulatory framework for stable coins. And arguably all three of those, Paxos is legit. It's just that their thesis is skewed. But the idea of, backing their dollars with gold, it kind of makes sense, right? It's flawed macro, but it's good. At least there's something. I don't trust Gemini. I don't trust Binance. I don't trust Tether. I don't trust anything that even rhymes with Do Kwon or Luna. I mean, it's called Luna. Who? You didn't take three seconds and you knew that thing was a scam. Anyway, it's all about the assets. They say when people debate the intricacies of stablecoins, the most pressing thing they want to know is what backs the stablecoin. So this is them trying to answer that question in a better way. What backs the stablecoin, and can you trust us because we are NIDIFIS, and NIDIFIS is Legion. I don't know. I don't know anybody on that group or in that group. Anyway, off we go.
If we go to the next article, how about this one?
Woo woo.
UK to introduce legislation on stablecoins by August.
Wait, Eric.
Yes.
It's a UK thing. You have to use an accent.
I can't. I'm bad with accents.
But you have to try.
Do you want to try reading it?
No, you have to try.
Okay.
I'm going to do it. You
in my
have to
UK
try.
accent.
That's right, mate.
Okay,
give it
sure.
a go. Let's see what you got. Give it a go. Give it a good one. Give it a stiff one.
I'm ready. Stiff one. UK to introduce legislation on stablecoins by August.
Wait a minute. That's no different.
That's my accent. What are you trying to say?
Your accent is literally the exact same way you talk all the time.
That is
juicy
not
and
the
fruity.
same.
That right there's a milk toast accent, mate.
Should I try again?
Do you watch The Boys on? Do you watch The Boys, that badass show on Amazon Prime?
No, I never seen The Boys.
Oh my God, mate! You got to talk like Billy Butcher.
Billy Butcher.
It'll bring some toxic masculinity into your heart.
Okay, I'll talk like
mate.
Billy Butcher.
Billy Butcher.
Butcher.
No, not Butcher. Not Billy Butcher. I want to have a cheeseburger at the local cheeseburger factory. No, mate, Billy Butcher. He kills soups, mate. You all got to go. All of you. Peaky Blinders. Dear God, man, just read it.
Okay. In the accent or normal?
Well, you don't have an accent, apparently. Can you do any accent at all? Any?
Yes. Which one do you want to hear?
Any that's not normal, milk toast, juicy fruity.
Okay. You tell me what accent this is when I read this article. Don't interrupt me this time. People are going to leave. They're going to leave. All right, here.
They've already left.
UK to introduce legislation on stablecoins by August BOE's Cunliffe. There's been at least a bit of delay in the framework thanks to recent resignations from Prime Minister Boris Johnson's government. Guess it. Just
I don't know. Let's see. It's so worldly. I don't know where to begin. You sound like you were born. Where were you born?
Anywhere. I could have been born anywhere with that accent.
Yeah, with that accent, there's no way to determine it.
No, it's great.
Okay, so we'll forget about that for a minute. The UK Treasury, in consultation with other regulatory bodies, I'm going New Zealand now. Why? Because they left. Did you know New Zealand in Australia was a prison island for the British? Did you know that, Eric?
I did not know that. No.
They're like us, like the New Zealand, and they're like us. Us, like Americans. Those of you that are American, we're like tyrannical traitors, whereas they're just criminals, which is kind of badass.
Like Australians.
It's Australian for beer. In consultation with other regulatory bodies, including the Bank of England, BOE, which is actually a real central bank, by the way. It's not like the Fed. The Bank of England actually does stuff. The Payment Systems Regulator, PSR, and the Financial Conduct Authority will introduce legislation on a regulatory system for stablecoins. Okay, let me reduce all of this. They're taking this seriously. They're taking stablecoins seriously. This is all part of what I'm trying to intimate to you guys, and we don't even need to go through the rest of the article. It's not a very long article. We don't need to go through the whole thing. The whole point is the UK, and this is going to go, it's going to be more widely adopted through the EU, the Eurozone, the Emirates. They realize that stable coins are coming. coming, and it's going to happen. And so they want to be on the front end of regulating these things, kind of like New York, kind of like the rest of America at some point. And they realize they don't want to be behind the regulatory pathway, because what follows clear regulation is businesses that are willing to invest in those areas, those localities, those municipalities, those states, those countries. But if you don't have clear regulation, bigger companies are like, no, señor, no quiero hacerlo. ¿Me entiendes? Ellos no quieren estar en un sitio que no tienen reglas. ¿Me entiendes? Eric, you at least got that.
Nintendis?
¿Me entiendes?
Nintendis.
No hay regulaciones. No quiero estar allá.
I don't even
Dinero
know what
va
you're
a
saying.
salir.
Salir.
Dinero. Hasta luego, dinero. Bye bye.
Buy money.
Bye bye, dinero.
Buy money.
Buy money. Yes.
Yes. I learned something in high school. Yeah.
Caliente.
See, we take baby steps here.
Okay. Oh, man. 2 Braids just told us to proceed with the content. Okay. That's it. Move forward, Eric.
You mean next article, move forward?
Yeah.
All right, 2 Braids. We'll move forward just for you. How about this one? Circle is not allowed to use USDC reserves for any other purpose. Unlike a bank or an exchange or an unregulated institution, we cannot lend them out. We cannot borrow against them. We cannot use them to pay our bills.
So this is interesting. Again, more of USDC showing why they are better. And better than what? Better than USDT, Tether. A quick public service announcement. If you learn nothing else today, get your currency units converted out of USDT. And if you're going to hold stablecoin, hold it in USDC. I think that was pretty clear. Anyway, their business model is to minimize risk, not take on and manage more risk. This comes from their CTO. The cryptocurrency market has experienced turbulent periods as of late, with several firms filing for bankruptcy. I could go down the list, but we already know Voyager Digital announced its bankruptcy on Wednesday, becoming the second crypto lender to default following Three Arrows Capital. There's more, actually. It's not just those 2. Those are just the 2 big ones. In light of the present market circumstances, Circle has sought to reaffirm its commitment to openness and user security in a blog published Tuesday. The CFO of Circle said that his firm's priority is to preserve the financial integrity of the system: robust, trustworthy, and safe. I like that. Those are 3 things that are cool. He added that other financial institutions offer fraudulent promises of preserving user money, only to abandon them when the going gets tough. It's not when the going gets tough. It's when they get caught. When the market doesn't go their way, things go backwards, they get nuked, and then you see all of their bad behavior. Because when the markets are going up, everybody thinks it's because they're good. They don't realize everything's just going up. You had people that owned Shiba Inu and Dogecoin that thought they were smart because the price was going up. I bought it at 17 cents. It went to 56 cents because I'm smart. Really? And then it went back down to like 10 cents. Where are they now? They're driving Uber again. And when the markets go back up, those same people are going to be telling you, and it's nothing against Uber drivers, I prefer Lyft, but it's that when everything's going up, everybody's right, everybody's a genius, oh, ha, 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 oh, we're doing so well, oh, we're all rich. But when markets go down or they get flat or trade sideways for an extended period, this is when you see who is who. You see who was making bad loans, bad debt, no collateral, garbage collateral, gambling. So people are like, hey, listen, you know, Celsius paid off some lines of credit. Well, they had over collateralized loans. It makes sense. Pay off those lines of credit, get back that over collateralized collateral, right? Right. If you borrowed $100 with $1,000 of crypto, pay the $100 back, get your $1,000 of crypto. So Celsius is paying off a lot of their over collateralized accounts so that they can get those assets back. I think they freed up $300-400 million just yesterday or today, which is great. Problem is they are a bad, borderline corrupt organization. And so, you know, you have to look at these lenders and figure out, and it's not so easy. Again, crypto's not easy, but you have to figure out what they're actually doing. But what you don't want is all of this bad behavior, all this gambling in a stable coin issuer. because the idea of stability goes out the window. They have to have the collateral, they say. And USDC seems like the only one. Circle is not allowed to use USDC reserves for any other purpose. Unlike a bank or an exchange or an unregulated institution or like Celsius or Three Arrows or any of these degens, they cannot lend out or borrow against USDC. And they cannot lend out or borrow against dollars or cash equivalents used to back USDC. They cannot even use money that they've converted from their collateral. They cannot even use that to pay their electric bill. Period, full stop. This is why right now, and this will change in the future, there will be other stable issuers that are on the level, but right now it is USDC. Period, full stop. There are no others. None. If you own another stablecoin, any other stablecoin, it is dumpster juice. You should get rid of it. People rest.
That brings me to a question that we just got from the chat right now.
Woo,
from Will I Am.
Will I Am.
He's answering yes because I asked if anyone had any questions. He says he still needs advice where I can sell or get rid of my W Luna.
I mean, Will, I don't know how much you had, but my guess is if you take a look at that, it's worth about $4.
Oh no.
And that's if you had like $100 trillion worth. But you can probably, I know that Nexo allows swapping of it because some people had Luna on Nexo and they got nuked, but they were allowing swapping. So you could go there. I think Luna is was a Cosmos-based token. If W Luna, I don't even know. So you could probably on any of the dexes that swap like Osmosis, you may go look at Osmosis. And again, I know this is getting into the weeds. Those of you that are used to just buying and selling stock, you're going to say like, why do I have to go to these weird exchanges and do these weird swaps and do all this stuff? Because crypto's not easy. And because crypto's not easy, you know there's opportunity. If it was easy, the money would have been made and we wouldn't get to talk to sweet, juicy, fruity, milk toast broadcaster numero uno because we'd already all be either rich or have missed it. And there's still opportunity here. There's a lot of opportunity here. So, and by the way, Minnesota Tim, thank you. Thanks for joining up. We are working on the full schedule and all that. And I still kind of talk back and forth with Anthony quite a bit, actually. We texted this morning, as a matter of fact. We text buddies. We text homies.
That's cute.
Yeah.
Hey, how about this question from Dancing Shell? Does Nick still like Fetch? You haven't mentioned it in a while. And I have one more question.
Yes, I do like Fetch. And just really quickly, it is one of the assets I'm adding. It's 8 cents just about. I think it looks really good. It's down 72% on the year. I think it's in the range of delicious. I just think that what's pressing me, what I keep waking up with at night is I don't have enough NewNet. I don't have enough AGIX. And that falls back on my 5 Ts because the teams are so good. The teams are really, really good.
Thank you.
And John, I agree. Eric is probably not a milk toast guy. He's a juicy, fruity milk toast guy.
No, he said I was a super dad. He didn't say
that's a separate subject. You can be a good father, but be a juicy, fruity milk toast human.
Can you?
Matter of fact, you have to be a good father just to be basic. You don't get a high five for doing what you're supposed to do. Everybody is supposed to be a good parent. Jesus, man, look at evolution. True. If you're a bad parent, it's not like, look, I'm a great parent, I should get an award. You don't get accolades for doing what you're supposed to do because evolution, bro. Like if you're a bad parent, you have, hopefully not bad kids, but being a good parent is the basic you're supposed to do, right? That's the low watermark.
At least.
Now, a few people will win the award of America's best dad, which I think comes in the form of a mug.
Oh, I like those mugs.
A golden mug. I bet Nancy Pelosi has mugs you can't imagine.
Hey, Nick, I want to get this last question before we get out of here today. I think it's a decent one from Talents.
She has 633 talents?
That's crazy. Yeah.
I got like 2.
That's impressive. I know.
One of them is yodeling. I'm good at yodeling and yo-yoing.
Wow.
Not at the same time, obviously. I'm not.
No, that would be a talent within itself.
I'm not a prodigy.
No, you're not. Okay, how about this question? There's a theory that the crypto space is like the 2008 financial crisis, and Bear Stearns is like the Terra Luna, and Shearson Lehman collapse hasn't happened yet, but maybe it'll be Tether. So they're projecting $3,000 to $6,000 Bitcoin after the next collapse. What do you think?
They're predicting everything and everywhere, and they make these really low and really high predictions because that's the only thing that gets clicks. That's all clickbait. No one knows nothing. I think most of the damage has been done. Personally, I think there could be some little blips down, but I think most of the damage has been done. I don't see too many more unwinds. And the thing is that UST Tether, what would it unwind? Well, it would unwind liquidity pools and DeFi projects if it completely unwound. The thing is, the people at Tether do have money. They're just crooks, but they have money. They can infuse capital if they choose to pull out of their private stolen money stash. They've been running a Ponzi scheme for 10 years, bro. They rich. They were buying Bitcoin at like 40 bucks. So if they choose to capitalize Tether, they can. They just haven't at this point. And until they do, it's a no-fly zone. Get out of Tether until further notice. Will Bitcoin go to 3K, 6K? I think would be fanciful and ridiculous. But nothing's impossible. So I just wouldn't. It's not impossible. It's improbable. And on that note, we'll see you tomorrow. Stay out of trouble. Stay in school. Don't do anything. My poor insolvent drunk strung out on meth, or our favorite juicy, fruity, milquetoast broadcaster numero uno, Enrique, wouldn't do, and that ain't much. Pew pew, pew 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 pew.